You're out, Michael. 87.
87, yeah.
87,
Dornbush download 87, yeah. 87, the unlucky number if you're a cricketer.
Yes.
Welcome to another download. Pretty hectic old week, the last couple of days. Really a lot been happening. And I guess the focus, of course, interest rates yesterday.
Didn't it kick the market, though?
Oh, it did. It did certainly. Well, certainly I think I wasn't expecting one.
No.
I know there was about a 50-50 sort of bet as far as economists, and the ASX RBA tracker was, I think, about 50% as well. But
and when you look at the stats, Michael, it's not often that it's been just one cut. There's another one soon after, so maybe we might be seeing 1.5% over the next couple of months as well.
Amazing, isn't it? Yeah, I was only reading another article this morning. Some jokers come out and said that, there's going to be another cut before the end of the year.
Straight onto it, aren't they?
Yeah, so I think since I was reading something that from, I think it was about 1970, I think the average interest rate up until now has been 4.9%.
Okay.
So to see them back at 1.75, just extraordinary.
It is extraordinary.
Again, great if you've got a mortgage, not so great if you've got money tucked away in term deposits.
My fixed rate comes out in November. So.
Beautiful. But yes, of course, that interest rate decision and budget last night. Morrison delivering his first budget. At face value, there didn't seem to be a great deal in it, but gee, there's a few stings in the tail, isn't there?
There is, and the more you start to read about things, and there's a lot still undecided, Michael, isn't it? That 1.6 million cap in superannuation, but what if you've got 1.8 million? There's no clarity around what's going to happen with that other 200,000, is there now? So still a few things to come. And the other one, unfortunately, is transition to retirement. They're going to take away the benefit of not paying tax on the earnings, but is that going to be right across the board now, or is that going to be grandfathered? There's no information around that either. So.
No, exactly right. No, there's a lot of devil in the detail, no doubt about it. But you're right. I think that the one of the proposals brought out was that basically people with money in super. To the tune of more than $1.6 million couldn't or can't roll in excess of that amount into a tax-free pension fund.
Yes.
And existing people as well. This is going to affect from July 2017. So if you're in pension phase at the moment with a couple of $1 million in your own member balance, it's looking like you're going to be required to pull some of that out or roll it back into accumulation mode. So, it's a bit of a nasty one.
It is a bit of a nasty one.
Absolutely, and it sort of has sort of, I guess, memories of the old reasonable benefit limits, back in the early days.
Gee, that's a nightmare best forgotten, isn't it?
Geez, I'm not going to sleep tonight thinking about that.
One good thing is they've done away with the work test.
Yes.
That's interesting, isn't it? Just flick that. So
that was one of the big positives, wasn't it? Yeah, where people over the age of 65 were basically required to work to get money into super. That's now gone. So looking like it's going to go. So that's a big plus actually.
It is a big plus.
Because there's a lot of people out there with money again. Sitting in bank accounts and that sort of thing.
Which could work a bit harder for them. The $500 non-concessional, $500,000 non-concessional cap that is going to affect some people as well. And I see they're going to backdate that to contributions since 2007. So that's a bit tough, isn't it?
Yeah, that's a really interesting one, isn't it? Because it came in effective as of last night, budget night, and they're going to look back to the 1st of July 2007, as you say. So, that's going to put a lot of people's potential retirement plans, using the superannuation vehicle at least at risk. That coupled with the 1.6, that's going to affect a few people out there. And
so I suppose spouse contributions is something to consider more. And I was thinking insurance bonds are something to consider more as well, Michael, aren't they? I mean, sure, they're tax paid at the company tax rate on the way through, but when it comes out, there's no capital gains tax because that tax is being paid. So that could be some benefit for the higher earners, or if you're above 30%, or in that bracket.
Absolutely, yeah. I think you're dead right. Those insurance bonds are going to come way back into favour now with some of these cuts to what you can actually get into super plus what you can have in super. Once it's in there. But yes, negative gearing may come back into vogue again. We haven't seen a lot of gearing, particularly on the share side of things. The old margin lending was very popular there a few years ago until things got a bit hectic.
But haven't they made that hard now too? Margin lending. It used to be, press hard 3 copies, but now it's like applying for a bank loan, isn't it?
Exactly right.
How many hurdles do you have to jump through? It's or hoops you have to jump through. It's crazy.
Absolutely, you're exactly right. It's got the feel like you're taking out another home loan again, and they want to know pretty much everything, bar the colour of your undies. So, but it'll just be interesting to see what sort of transpires. Like, it's going to take a bit of time for people to digest. Us ourselves as well. Of course, there's a fair bit of devil in the detail again with these things. Not to say, of course, too, that any of these will get through either.
Well, that's exactly right.
So, we've got the election early July. These things tend to, they need to sit through both houses of Parliament.
Yep.
So, again, a lot of these things could be kiboshed before they even get going. So.
I see too, just looking through the numbers there, under Medicare, there's they're taking away some $215 million. And that's been factored into those health companies for radiology and those sort of things. So they're reducing that side. I mean, none of that was mentioned last night, but it's there in the figures. So.
Yeah. No, it is. It's a real. It's very tricky to try and sort of assimilate all the information from an hour, a couple of hours speech. So there will no doubt be things to trickle through the woodwork over the coming weeks, and making life interesting for all of us. So.
I reckon we just make Brendan read it all.
He's pretty good at that sort of thing. But certainly on the share front too, Dan, I guess this week been busy for banks. Westpac on Monday, 3.9 billion, 94-cent per share dividend. ANZ yesterday was probably the surprise.
That was, Yep, new boss in, cleaning out the decks, I suppose, Michael. Huh?
Yeah, absolutely. Yeah, capitalised a lot of expenses. Profit was off 20-odd%. Dividend was cut back to 80 cents.
Yep.
But yet I think the shares finished up 5%.
5%, amazing.
In the end. So NAB tomorrow. So
and Macquarie Friday.
Yeah, and no doubt there'll be similar themes there.
Yeah, they seem to be talking though Macquarie might increase by about 25%. So that'll be interesting.
Yeah.
See what comes out there on Friday.
Yeah, Macquarie's sort of been bubbling away in the background a bit there, hasn't it? Sort of dropped off the radar from many years ago when it sort of had fingers in numerous different pies, cleared the decks, and it seems to be really consolidating again now. So, but yes, another busy week. Thanks, Dan. I think that wraps us up for number 87.
I reckon.
Thank you.